The escalating conflict in the Middle East is casting a long shadow over global markets, threatening to reshape economic landscapes and impact your daily expenses. Global oil markets are on edge as the Middle East conflict intensifies, pushing crude prices significantly higher. Brent crude futures have surged above $90.50 a barrel in early March 2026, reflecting a significant increase. This climb marks an approximately 10.4% jump over the past month, with an $8.25 rise per barrel, reaching levels not seen in over a year. The escalation of geopolitical tensions in the region is directly contributing to this sharp upward movement, sending ripples of concern through global economies and impacting commodity prices worldwide. This isn't the first time Middle East tensions have rattled oil markets. Historically, periods of geopolitical unrest in the region have often correlated with significant spikes in crude oil prices. We've seen similar patterns during major events like the 1973 oil crisis and the 1990 Gulf War, both of which led to dramatic price surges, sometimes doubling prices within months. The current situation adds a substantial risk premium to oil, reflecting concerns over potential supply disruptions. In late 2023, initial skirmishes caused a noticeable uptick. By early 2024, shipping route changes in the Red Sea further amplified fears. Now, escalating hostilities in early March 2026 have directly driven this latest price surge. This historical context underlines the market's sensitivity to stability in this critical oil-producing region. Several key factors are converging to propel crude oil prices upward. Foremost among them is the ongoing conflict in the Middle East, particularly concerns about its potential to disrupt major oil production and transit routes. Secondly, shipping disruptions in the Red Sea are adding a significant risk premium. Rerouting vessels around the Cape of Good Hope adds 10 to 14 days to journey times and increases fuel consumption. This has caused container shipping rates on key routes to surge by 15 to 20%. Lastly, OPEC Plus has maintained its production cuts, reinforcing tighter global supply conditions despite rising demand signals from major economies. The surge in oil prices has far-reaching consequences beyond the commodity markets, directly affecting various industries and the cost of everyday goods. Transportation sectors, including airlines and freight, face higher operational costs, which are inevitably passed on to consumers. This translates to increased fuel prices at the pump for drivers and, crucially, higher prices for food and other consumer goods, as transportation is a significant component of their overall cost. For consumers, a rise in oil prices often means a more expensive grocery bill, impacting household budgets across the board. The inflationary pressure from energy costs reverberates throughout the entire supply chain. Looking ahead, market analysts are closely monitoring the evolving situation. Goldman Sachs analysts project that Brent crude could climb to $95 to $100 per barrel by mid-2026 if geopolitical tensions continue unabated. The International Energy Agency has voiced concerns regarding potential market instability, highlighting the need for vigilance. A critical watchpoint will be the upcoming OPEC Plus meetings, where their production policies will be keenly scrutinized for any shifts in strategy. Furthermore, any signs of de-escalation in the Middle East would likely provide some relief to the markets. Traders and investors will also be observing global demand indicators, particularly from major consuming nations like China and India. The current trajectory of oil prices underscores the profound interconnectedness of global geopolitics and commodity markets. As the situation in the Middle East remains fluid, the energy sector will likely continue to experience heightened volatility. Future developments in regional stability and the strategic decisions of major oil producers will be pivotal in shaping the global economic landscape in the coming months. This is GeeseFinance.